Feeling, oh, there we go, live streamed. How's everyone feeling today with the stock market back down? Pushing here back really close to new lows on the S&P 500, right at that 200-day moving average again. Come on. We took a step forward yesterday, it seemed, off what could be positive news, but now confident back up. I would love to see some upside too. Bill, not good. Yeah. It's just this and I don't want this to be political. It's really not political about who's right or wrong necessarily. I think the markets thrive on certainty, and right now there's just so much uncertainty. It's tariffs on, tariffs off, tariffs on, tariffs off, tariffs on, tariffs off, and it's just making it really hard for the stock market to gain a good gauge or footing on where we are headed next. With that said, I've been saying this for about a week now. I do think that we are really, really either at the bottom or really, really close to the bottom. We've already priced in so much of this uncertainty at this point that there's a lot more upside than downside catalysts ahead, in my opinion. And we'll talk about seasonally why that might make sense, as well as previous patterns in the market as well. Markets have been brutal. Yep, you're right. Cyrus made some money on the SPY. There you go. I know when service will be updated with this year's trades? I don't see any updates. Doug, I'm not sure what you're talking about specifically. For my services, they're updated every week. But yeah, it's been a tough last month and a half, last 6, 7 weeks. Would love to see some certainty now tomorrow for you Bitcoiners like myself. Hopefully, we'll get some big news tomorrow with the Strategic Reserve. White House is having a big event and press conference. Bitcoin, interestingly enough, is only down 0.3% today, which is nuts considering that the Nasdaq tech stocks are down 1.5%. Typically, Bitcoin would be worse than the tech stocks, but Bitcoin's actually holding up the best right now. Well, second to gold, bonds, and emerging markets, but better than the SPY, better than the small caps, better than the Nasdaq. So that's very interesting. Alrighty, well, let's go ahead and get this party started. Today, we're going to talk about seasonality 101, how to leverage market odds or historical factors for us. I'm also going to give you the top three stocks on the March calendar. Blurred out here, there's a bunch of stocks that are on the calendar, but I'll give you my three favorites for free. Now, thank you all for joining me today. My name is Graham Lindman, and today I'm going to teach you one of my favorite ways for identifying stock trends, patterns, and forming my analysis for what is to come. This is for swing traders more specifically, not for day trading, not for overnight trading, more for looking out the next 2, 3, 4 weeks and beyond from there. So my analysis actually today really will cover about a 90-day period based on what we're seeing right now with the data. Now, today is going to be a major data dump, meaning I'm going to share with you guys a lot of information, a lot of different sources, a lot of fun, different facts and nuggets. Now, I will share this link to the slides in Telegram. So if you're in my Telegram, let me just post that link for Telegram in here real quick. This will be posted in Telegram, and then let me show you this. If you so I'm just jumping ahead here just to show you. If you guys open up this slide deck, you'll see down here in the comments section is the link for the source. If you guys want to go right to the source and see what else is available on those sites. So again, I will post this in Telegram. You're gonna have links to all of the sources. This will be recorded, a lot of information, and this is stuff that is pertinent for the entire year. It's not just for this month. We are going to talk about March. We are going to talk about the next, 90-day period. But I'm going to share stuff with you that is relevant for the entire year, and not just this year, but next year and the year after and the year after. So these are the kind of charts that I like to build kind of a Rolodex of. Just always have in my back pocket so I can say, it's June, we're going into July. What does that normally mean for gold? Or what does that normally mean for the discretionary sector? Or what does that mean when the Fed starts cutting rates? Fed starts cutting rates. What does that normally mean for the markets? I can pull up these pieces of information to kind of see what's happened in the past because history doesn't always repeat itself, right? Not always 1-to-1 ratio repeating itself, but it often rhymes. So a lot of times we'll see what happened, with high inflation back in the 70s. Also happens, in today's market. Now it's not like the stock market went up 10%, we go up 10%, but it's somewhere within that rhythm of the market and of these patterns. And that's why they're important to study, they're important to know, and really become comfortable with over time. And the more you're trading, the more years you put in, the quicker this stuff's going to come to you over time. So it's almost like our playbook for the year. It's the opening playbook session, but this is kind of like studying our playbook. Like if we're a football player, for a quarterback, you got to know your plays. So you get up to the line of scrimmage and there's no second guessing who's running what. No, you're now doing the second level of analyzation of saying, what is the defense doing? Let's line up and set our players up for success. So that's why we do this. Now, I take in dozens of market patterns and seasonality factors to get a gauge on where I believe the stock market will head next. And we're going to cover all of that today. First, there's what I call basic market seasonality. So just very basic, high level seasonality. And this is typically, we're asking the question, what does the market typically do each month? Here's the first chart I'm going to share with you today. This is the S&P 500 returns since 1990. Let me go ahead and see. The thing is, there's going to be all sorts of different charts like this. Um, if you just Google market seasonality by month, S&P 500 seasonality by month, you'll get something that looks like this. Now, some of them will go back to the 1950s, some will go back to the 1990s, some will go back to the 1920s. So they're going to have a little bit of variance, but overall, you're pretty much going to see something that looks like this. Now, this is 1990 through 2025. So this is 35 years of data. And so now we can look at this and say January is typically fairly bullish, right? February's flat. March, April, May, typically a very bullish period. June, not so good. So they say sell in May and go away. Here's why. Markets typically get a little more volatile going into September, October, and then Q4, Santa Claus rally, we can see here. So this is just a good general chart to know what does the market typically do. Now, again, I'm going to post this in Telegram. Down here below will be the link for the source. And let me just send you guys this link right now so you can see why this is important to have. Here comes the link. Post it in the chat. You'll see in here, it's really cool. There's a lot more information in here, a lot of data, as well as other sources. You can see the same chart for the NASDAQ 100. You can see it for the VIX, for gold, for crude oil. So sources like these are really great to have, and just knowing what the markets tend to do. And I'm actually going to point to gold in VIX here in just a moment and show you why it might all make sense. So just remember this for now. Markets tend to be good March, April, May, which we are just now going into. So I'm really getting excited about the stock market. Hopefully we get some stability here and we can build off of it. As a matter of fact, the SPY is trying to close the gap right now. That's a good sign for us. Bitcoin is up 0.5% on the day. Good sign for us. I'll walk you through why I believe we're about to bottom here in the next few days if we haven't already. But March, April, May, typically good. Summer months, typically not so good. August, September, normally the worst time of the year. This is going to be very interesting for you guys to see how this correlates the volatility index into gold. So before I jump ahead of myself, let's keep moving. So we just looked at the S&P 500 by month or per each month, January, February, March, April, May. Here's a good little data if you want to go a little bit more granular, if you want to see what happens monthly, historically speaking. Now, again, this one goes back to 1950, so a little bit more data here. Um, I just realized the link below is to that previous website, not to this one, so I'll have to dig this one up later. But here, it splits it up to each month, the first half of the month and second half of the month. So first half of July is typically the best time to be long stocks, which is interesting because July is typically one of the best months of the year. So see how this marries up. So first half of July is the best time. And actually, let's go ahead and find where the second half of July is. Second half of July is just pretty average. So it's definitely first half of July. You got to remember this when you study this. So when end of June comes around, you're like, wait a second. First half of July, something special is going on. Let me pull up my seasonality. Ah, yes, it's a very bullish time. Same goes for the first half of March. That's where we're at right now. First half of March, very bullish. Same with the second half of March, slightly above average. So this is how this chart works. It breaks it down to first half and second half of the month. Here's your classic Santa Claus rally in the second half of December. Look at that. It's the fourth best time to be long stocks in the market, all the way down to the worst times to be long stocks. So here you can see the average return. Does this make sense to everyone what that 1H stands for or that 2H? If not, just say no in the chat and I'll try and explain a little bit better. Yes, yes. Okay, a couple no's. Don't worry. So this is break. So let me go back to this previous chart. This makes sense, right? January, typically the markets gain 0.5% on average. February, typically markets are pretty flat on average. March, typically they gain about 1%. April, typically it gains about 1.5%. This makes sense, right? This is pretty straightforward. Yes, 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 yes. All right. Now we're going to divide each of these months in half to see, okay, March is typically 1% up. What does the first 15 days of March look like? And what do the last 15 days of March look like? So we'll flip to this chart. For 1H stands for first half of the month. So like the 1st through the 15th on any given month. Obviously, February is going to be the 1st through the 14th. So bear with me. It's the first half of the month of July is what you see here. First half of the month of March, what you see here. So second half, 2H stands for second half of December. So that'd be December 16th through 31st, meaning the second half of December typically gains 1%. That's very, very bullish for a 2 week period in the S&P 500. When is the media half percent meaning above average? I'm not sure. Just ballparking here. I mean the average. Oops, the average return would be somewhere in here. So you can see that these are around average. These are above average. These are below average. Mary, I will post a link to this in Telegram. So if you're not in Telegram, you need to get in there. All right. So this is how this works. Right now, we're in the first half of March. Very, very bullish. In fact, it's typically the second most bullish time in the stock market. Second half of March, slightly above average. Look at April. First half of April, very bullish. Second half of April, very bullish. Right? And then we go into May, flat in the first half, second half bullish. So we're coming up on a nice little hot streak, including right now we're down in March, but according to this, we should be heating up soon, and according to a lot of other factors as well. So this is breaking it down instead of just looking at the monthly returns. We're looking at bi-monthly to see, hey, if I'm going to swing trade in the first half of March, should I be going long? Should I be going larger than normal position sizing? Well, maybe right now that might be a good time. I'm not telling you that you absolutely needed to do that, but that's how I would look at this data. Versus if, say, let's say that June is a bullish month typically, but we're in the second half of June, I might say, you know what, this is a little bit concerning. Let's use the standard position sizing. Stacy, does this take into account new president? Good question. This is all years. So this is all years, new president, old president, president in his first year, second year, third year, fourth year, it doesn't matter. But I will show you presidential charts here in a second. Similar to that, here is the monthly returns of the S&P 500 broken down by sector. It's one of my favorite charts right now. It's a really, really good little note card to have on your desk. So similar to that first chart I showed you of the January, February, March, April, May, right? That's what this is down here, the S&P 500 total return. Similar data right here. Well, now we're going to break it down to sectors. So there's 11 sectors now. Keep in mind, communication services is still newer. It's a new sector, so this data may not be as solidified as, let's say, utilities, which has been around forever. But here we can break down to see, like, what does energy typically do? Well, let's see. Energy, I'm going to find a good example here where it might contrast. So let's look at this. September is typically a bad month for the S&P 500. S&P index, September, negative about 0.9%, 1%, not a good time. However, if you see some energy stocks that look good, well, that's not necessarily a bad time to be long energy. It's one of the few sectors that are actually positive. Same for healthcare. However, if we're looking at this and it's September, we know typically the S&P falls in September. It doesn't matter how much I like a material stock, I'm probably not going to trade it because typically that's a very, very bad time to be long materials. On the other flip side of that, let's look. Here's a good example again, energy. So we know in April, typically the stock market rises. It's typically a good time to be long stocks. And my focus might turn towards, materials. It's typically a leading sector. Real estate, leading sector. Energy, leading sector. Cyrus has a good point here in the chat. You can't rely on seasonals alone. I absolutely agree, but this does give us kind of a baseline framework. Obviously, energy is very affected by policies that are going on in the government. Same for real estate. Obviously, we've seen that with consumer discretionary with the tariff news. Those have been just getting whipsawed. So definitely, this is just something. This is one of your layers, one of your pillars that you put to build your high conviction trade opportunities. But all things considered, if we're looking at a normal time where there's not a lot of craziness going on and not a lot of like right now, there's a lot of uncertainty. This might not play as big of a factor in your decision making, or you might just position size smaller. However, if we're in a normal time, steady time, stable time, this becomes a lot more prevalent. So hopefully that makes sense. So I will share this in Telegram. Really great chart to have on your desk when you're trading. Gold seasonality. So this is from that same website that I posted in the chat. Check this out. So we just talked about S&P seasonality. Markets typically fall from the peaks in July through September. Not a great time to be long stocks. Scary, 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 right? Well, isn't it interesting that gold is just the opposite? So people flee the stock market, they get scared, and they move to gold. They move to hedge positions or safe positions or counter market positions. Isn't that interesting to see? I think it's interesting to see at least. Same can be said for March, April, and May. Very bullish time to be long stocks. People are a little bit more speculative. They like to gamble a little bit more. Well, they're moving out of gold. I think that's super interesting. Notice this, the best month for gold is January. It's a new year. And I tend to think that that's because for whatever reason, people think new year, something, we're starting over from scratch. It makes people feel uncertain. We got a whole new year ahead of us, a blank slate. What could happen? Anything could happen. That's my own suspicion for why January is the best time for gold. However, very good chart to have in your back pocket, and it plays in line with the volatility index. Now, I personally don't really trade the volatility index a ton on my own. I used to do it more. I used to trade the ETFs just because they're baked to the downside with decay. I used to use my bearish wrap orders on them, and it was awesome. However, now it's just kind of priced in. Not a lot of edge there with what I used to do. But notice here, same thing. Volatility spikes here late summer, right? Markets fall late summer. Gold rises in the uncertainty. When the VIX is spiking, gold is rising. Now notice this. From the end of September through the bottom or through November, VIX is dropping. That means that people are getting more confident. So when VIX is spiking, people are fearful. When VIX is dropping, people are getting more greedy. So people are getting more confident, more confident, more confident. And let's look how that reacts to the S&P 500. People are scared and they get more bullish, bullish, bullish. Isn't that interesting? The seasonality is practically inverse with the VIX and S&P 500 and similar to gold. Not completely inverse, but you can see the parallels here. When VIX spikes, gold prices spike. S&P falls. I find this stuff fascinating. I hope you guys do too. What is the symbol you would use to trade materials? That's XLB. This is the material sector that you can use to trade materials. All right, we had a question about presidential seasonality, and that's a great one to point out. Now, let's remember, a lot of people think election year and first year of a president is the only seasonality you should look at, but I think you should look at all 4 years. And you're going to see why here in a second. Now, that said, I think election year may be the most important, and inauguration year may be the second most important, but let's walk through all 4 years. So, this is the chart I've been showing you all year long. We've pretty much followed it to a T. And remember, history doesn't repeat itself, it rhymes. So, we didn't see it do this exact movement. We saw it go here, 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 and then now we're back down here. Sorry, right about here. And we're actually over in March now. I don't know where my drawing went. Let me just go ahead and draw one for you guys so you can see how difficult it is to draw for my poor art skill. We're something like, oh no. There you go. There's my drawing for you guys right now. So this is a new presidential cycle. Notice we have a little dip, or we go higher right at the beginning of the year, dip, new highs, tank. The red line is with a new party, which is what we have this year, went from Democrats to Republicans. Typically, it's more bearish than what we've seen this year. However, we're finally catching up to the downside at the moment. But notice that we typically stabilize in March. And when I said I think we're at the bottom or near it, typically we stabilize by March 10th or so. and then we go higher from there. It's not straight up. There's still swings, but very, very bullish time. And the stock market. Cyrus says, I like XLP. So you like staples, materials, communications, and industrials for this market. Awesome. Cyrus, you're always on top of it. I can always count on you to post some good feedback here in the chat. So here is inauguration year. That's what it is in 2025. That's what it'll be in 2029, 2033, 2037, so on and so forth. The green line is all inauguration years, the average of it. The red line is when the party changes over. So a little bit more uncertainty when the party changes over. It kind of makes sense. No matter if it's Republican or Democrat, it's going to be new leadership, new regulations, deregulations, executive orders, all that sort of stuff. But we are typically entering a very bullish window here. Here is a let me take this out. Since I new. Here's the same sort of information. This is for an election year. So this was last year for us. Sitting president running. You can see that green line. Open field, which is what it became here in September, August when Biden stepped down. But this is just another good pattern. I'm not going to spend too much time on this one, but all election years is that black line. So it's just seasonally what happens in the stock market in year 4 of a president's term. Now here's the full cycle, and this is what I find really interesting. Year 1 is that chart I just showed you, right? Some uncertainty here. Bottom out in March, go higher, higher, higher. Anyways, you can follow along with that if you want to. Year 2 is typically when we see it kind of peak out and turn over. And then year 3, look at year 3. Look how bullish year 3 is of a presidential cycle. And it's like year 2, end of year 2 going into year 3. Year 4 is what that chart I just showed you. So this is just a cool one. This covers all 4 years, and this is just historically speaking. Again, the link is here in the bottom of this page that I'll send to you guys in Telegram. Cheryl, no problem, Cheryl. So does this make sense, everyone? Give me a no in the chat if this does not make sense what we're looking at here. All yeses so far. Awesome. So it's just really interesting stuff to me. So what does this mean? Well, it means if we're looking at, and I'm going to bounce back and forth here. So typically if we're looking at this and we say October, November, December is bullish, I'm going to get really bullish. Well, you might then bounce it off and say, okay, what does October, November, December typically look like for year 1 of a president? Oh, it looks great. Okay, that's double confirmation for me. On average, it's up. In year 1, it's up. What about in year? Let's find out here. Well, they're all up. Okay, this was a bad example because Q4 is always positive in each year on average of a presidential cycle. So there you go. Let me see if I can find one that's. Let's look at March, April, May. That might be more interesting. All right, cool. So year 1, we said March, April, May, very bullish. Okay, perfect, and it lines up with the S&P seasonality. But year 2, so next year, we might be looking at that chart that I just showed you with the blue bars and say March, April, May is typically bullish. However, about this time is when presidential seasonality cools off. So that's going to play a factor into our decision making, to how bullish we are. Versus year 3, look at March, April, May here. Holy moly, red stinking hot. So you see how these aren't, you don't look at one chart and make up your whole mind based off of it. No, you get a couple different charts, a couple different seasonality tools, and then start to mesh your ideas together. This makes me very bullish for Q2 of 2026. This makes me a little bit more bearish or concerned. And I shouldn't say bearish, but more neutral for Q2 of next year. Does that make sense for everyone? How you use the different charts and piece them together to kind of, I don't know what the word is, but like that little Ben Franklin glasses where he drops in one lens and the other lens and the other lens till you can see what, the final outcome could potentially be. Awesome. 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 Another fun one here, Bitcoin seasonality in a presidential cycle. You typically see from election day, the next 365 days is the most bullish time for not I shouldn't say the most bullish, but a very bullish time for Bitcoin. So election day, 393% return. Election day, 2,000% return. Election day, 10,000% return. Notice Bitcoin obviously diminishing returns each time. I would love to see 100% return here. But we'll see. I don't know if we'll get 100. My target's 150 at some point this year. 150K on Bitcoin. We're at 90, 91 right now. So there's just a fun little bonus chart for you. All right, so we looked at the monthly patterns, we looked at the yearly patterns, so we took that kind of big view, but there's other patterns too. So that was for swing trading, maybe investing, maybe looking at a month, 2 months, maybe 2 weeks. But what if you want to trade a little bit shorter time frame? What if you want to do some short dated patterns? I'm not going to spend too much time here, but there's some cool things in market seasonality on a shorter lens. Number one is the weekend effect or the Tuesday through Friday effect. I'm sure you guys have seen this chart before. We've got multiple strategies built around it here at Prosperity Pub and Trading Pub. Monday historically is a down day in the markets. Tuesday, Wednesday, Thursday, Friday historically up days. I call it the weekend effect, or basically two factors that happen. One is that Wall Street after the weekend comes back on Monday and says, okay, what am I going to sell and what am I going to get into? So it's kind of a rotation day. Secondarily, news happens over the weekend, so there could be volatile news. We have seen that over and over again this year, where it causes stocks to open down on Monday for a drop. However, typically Tuesday, Wednesday, Thursday, Friday, they go higher. Just a fun little chart. This dates back to 1929, so almost 100 years of data. Just a fun thing. Another cool one, I just love this one, is the overnight effect, where if you look at stocks from the open to the close, so from 9:30 to 4 p.m., that's this blue line. If you were to buy 9:30 and sell at 4 p.m. every day, you would have made no money. All of the gains in the markets technically happened overnight. So if you buy the close and sell the open, that doesn't mean the markets doesn't move at all during the day. It just means typically over time, it's just the gaps overnight where the real actual groundwork is built for the markets. So that's a fun one. We've had quite a few strategies. I know Nate has done his overnight options from this. Nate's one of my good friends. I do my moonshots based on this overnight anomaly, where basically we're just looking for stocks that are primed to gap up overnight. And this goes back to 1993. So pretty cool stuff, in my opinion. All right, I'm not going to spend too much time there. I'm not really a day trader for the most part, or uh, I mean, I don't have any strategies personally built around this. I trade more so on momentum, but those are just fun things to know about. So we talked about typical seasonality. We talked about breaking down each month. We talked about short time frame seasonality. We also talked about presidential seasonality, which would probably fall under this macro pattern, but there's all sorts of other macro patterns. As a matter of fact, I probably should have pulled up something for tariffs since that's what we're in right now. Let me just Google if there's anything that pops up right away. All right, there's nothing that pops up right away, but I will punch it in here if I see, if I come across anything where, like, trade wars, what normally happens there. But there's all sorts of macro patterns. Obviously, the biggest one that everyone looks at is the rate hike cycles, the rate cut cycles, and then when rates are flat. So, start of rate hike cycles, like we saw in 2022, everyone remembers when rates were so dirt low. I should have bought 3 times the size of the house I bought, and watched it skyrocket during COVID. But hey, 2020 hindsight, that's why we look at this. Um, Start of the rate hike cycles. So we're at the end of this now, but you can see when the first hike happens to the last hike, what does the market typically do? Well, contrary to most people's initial reaction or thought, is the market is typically actually bullish during rate hike cycles, which I find very interesting. People think rate hikes mean a slowing economy, which in theory it does. You start to see people get squeezed a little bit more because the cost of living goes up. But for whatever reason, typically from the first hike to last hike, positive returns in the markets there. Let me see. This is just average. Oh man, 60 rate hikes in the 70s. Oof. And what did we have? 10? I don't even know what we had this last cycle. I need to update this chart. Um, See Hawkeye Smoot tariffs late. Marge, I'm gonna post that here. Rob, this is recorded, yes. And I'm going to post this deck link in Telegram too. Marge, I posted that in Google. I'm just going to go ahead and look at that later, but thank you. Thank you for that tip. Um, what is this? Similar chart here. If you look at this, is going to break it down instead of this is full cycle from first hike to last hike, full cycle return. This one's going to give you a 3 month, 6 month, 12-month outlook. And this is really interesting to me. Start of the rate hike cycle. So this was March of 2020 for us, or 2022, excuse me. I think we're through the rate hike cycle, hopefully. But if we were to go back to March of 2022, I'd be pulling up this chart and showing it to you and saying, what do we think could come next over the next 3 months? Very, very choppy, not good overall, only positive half the time. And remember, we saw the markets fall pretty bad. Next six months, though, and this did not happen in 2022, but over the next 6 months, this is historically what happens. Uh, Still kind of mixed bag. Average return is 7%, which is really pretty good over 6 months. I mean, that's great. 75% positive. However, if we look at, say, this, what happens here, and I wonder, I need to get these updated to 2022, 2023 data, but let me go ahead and look. But here it's interesting. 100% of the time over the next 12 months from the first rate hike and then plus 12 months, that's what happened. Now let's see if that even happened. That did not happen this last year. Here was the I pulled up S&P 500 during the last cycle. So I'm rough estimating here, but in March we had our first hike, and the next 12 months still down 10%. However, historically, typically over the next year you get a really positive return. So again, if it's failed once, but it's happened 8 out of 9 times, it's pretty good odds that first hike through the next 12 months can be a bullish time in the markets. All right. So now that's all old news now, pretty much. We're not going to, well, I can't say we're not going to, but hopefully we won't see any more rate hikes here. But what happens when the cycle is at when the Fed starts pausing rates, which we saw already? When was the last rate hike? When was the last? What was it? July? It's been a year? Has it been a year, guys? All right, it says July. All right, so in July of last year, that was the final hike. How does the S&P typically return after the final hike? Very, very bullish. What did we see from July until now? Let me just pull it up for you. July through 12 months. Because I'm assuming this doesn't have it on here. Let's look at what happened this past cycle. So there was the final rate hike, or that was the last rate hike was July in 2023, July 26. So again, this is kind of a rough chart here, but look, similar pattern. 455 went up 100 points. It's a 20% move on the S&P 500 from the last hike until 12 months post. So it finished, you see a chart right in here from this last cycle. So again, another positive reading. So that's why we look at this data, say, okay, the Fed says we're going to hike one more time, but after that we're done. Uh-oh, time to start loading up and get long stocks because things are about to get bullish and heat up. There was one time where it failed, the year 2000. But look, on average, very bullish. It's 10% move, a little above 10, 12% move, sometimes even bigger, like we saw this last year. 2024 finished with a 22 roughly percent gain, just looking at it here. So that's why we want to know this stuff. That's why we want to study this stuff so that the next time it pops up in the news that the Fed is doing new rate cuts or new rate hikes, we always know, okay, you might not know exactly, you might not remember exactly what happens, but you can, go to the slide deck or build your own sort of Rolodex and say, all right, let me pull up my charts. Let me see what typically happens. Let me make up my mind off that. Ignore the news, ignore the media, because you know what the media is going to say. Recession's coming, inflation's coming back, yada, 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 yada. Let's just look at the data. Let's look at what happened last time and kind of parallel our new market assumptions off of that. Here's another one. I need to get a cleaner chart for this, but similar. Um, Similar thing, but this time we're looking at rate cuts. So we saw rate hikes, end of rate hikes, now rate cuts. So the first rate cut, September 18th, 2024. Pulled up here. We're not through our first year yet, but historically, and this is interesting, here's the average if there's a recession, average if there's no recession, which obviously we don't know if there will or won't be one yet. However, this is interesting. So here's the first rate cut. We're currently up, what is that, 25 points? So is that 25 points? 68. So about what is that? 4%. So we've climbed higher. We're not to September yet. Obviously, we're about 6 months in. So we're looking about right here. 4%, we're somewhere here in the middle, right about here. So we're closer to the recessionary data than the no recession, which is interesting. Doesn't mean there's necessarily going to be a recession. Let me get my squiggly line out here again. Kind of look like this right now. So this is when the first rate cut, markets moved higher, chopped around, then went down where we are right now. Interesting data. Now, there is endless amounts of data. You can go and go and go. You can search the internet. I love doing it. It just gets me excited. But remember, we're just trying to find pieces that are relevant to today and layer on how does that apply to what's going on right now? How can I use this for my decision making, my position sizing, for picking a stock or maybe avoiding a stock in a certain sector, all of that kind of information. But I hope that this is helpful to you guys. I hope that you can return to this data on your own in the future and kind of get a gauge for where things might be headed soon. Again, I'm still very bullish on the stock market here. This is interesting to me to look at right now, though, because this would be our March, April, May. If we're entering a recession, not good. We had a chat, Daphne posted here in the chat this year with tariffs, rising unemployment. Does it make it different? That is definitely a factor. You definitely have to look at economic data as a factor. And I'm going to look a little bit deeper at this. What were the parallels here in previous rate cut cycles where a recession followed, and see if we have too many parallels to right now. But typically, right now, the uncertainty is normal in the first 2 months of a presidential cycle. It gets bullish from there. We've seen the same thing here in this chart. We see the same thing here in our seasonality chart. Overall, I'm bullish. Each sector bullish. A lot of reasons to be bullish. However, this one might make you a little bit more tentative. I'm going to go take a look at this after this class, actually, because I did not notice that until now. That's why it's important to always review this data, always be on top of it. Jim, looking at too much data can lead to paralysis by analysis. Uh, I don't know if I necessarily agree. For me, it just formulates. I would hate to look at too little of data and just kind of wing it, Jim, if that makes sense. Um, I don't think. I guess it, Jim, if you look at too much data or too much fearful headlines, I think that causes paralysis by analysis. I think reading CNBC's headlines every day is going to cause you to sell more, to sell when you should be buying and to buy when you should be selling. That's more so what I believe, Jim. But obviously, I respect your opinion, whatever you believe. But hey, I'm just trying to do what I can to be helpful here and hopefully give you guys, just a little bit better edge in your decision making. So now let's do a quick deep dive of March. Where do we stand in March? This is from bespokepremium.com. Great website. It costs money to get their premium information, but highly recommend it. Very, very good seasonal information. Gaston, based on this info, are you increasing your size? I have been, Gaston, over about the last week or so. I've been increasing, and I've been getting hit in the face off of it because we've still been heading lower. I thought we were going to settle about 585 on the SPY, which is where we were last week. We're down to 579 now, so about 1% lower from there. But I'm still very, very bullish. We might go a little bit lower, but this is, in my opinion, this is the time to start buying. Um, However, let's look at March. Deep dive of March. Last 25 years when the S&P was up less than 5%. So here's different buckets. Down 5% plus in the first 2 months. Down, what is that? Down less than 5%. up less than 5%, which we were going into March. We were just slightly up on the year. So this is what we're going to look at now. And then if we're up way higher, but uh, where we are right now this year, 68% of the time, March is a positive month. So about two-thirds of the time, it's a positive month. The average return in March, 0.79%. So again, lines up with what we've seen. When the S&P starts up more than zero, but less than 5%, typically a bullish month for March. It's over 25 years. So it's happened two-thirds of the time over the last 25 years. So what is that, 17 times? 16 times, somewhere in there, 16, 17 times at 25. Pretty good odds that we should, that March is bullish. Now, that said, like you guys have been saying, tariffs play into a factor. What's going on globally plays into your factors. But to Jim's point, I don't like to read too many news headlines because they will create paralysis by analysis for sure. So March, if we're looking at this year, 70% or two-thirds of the time positive, a good 0.79% return historically where we stand. Now, again, if we pull this up next year and say we're up 5% plus in the first 2 months, things look a lot cooler for March, or a lot more opportunistic for March. However, what I like about this year is if you look at the odds of it going higher, this is actually the best win rate for the month of March based on our current factors and where we are at. What if we look at the first 2 months and what that means for the rest of the year? So for the rest of the year, when the S&P gained through the first 2 months of the year, like it did, tended to build on those gains for the remainder of the year. So as shown in the chart, this S&P's median gain in the past 25 years when it was up less than 5%, like we just said, it's up more than zero, less than 5 through February. The average median return was 10%. Positive returns 80% of the time. This is since 1928, so this is almost 100 years of data. Given on what has happened so far, 80% chance, historically speaking, that the markets will finish higher this year, and about 8% growth from here, if I'm right, 8 or 7% based off, I can't remember exactly where we finished year to date at the end of February, but a close to 11% return 80% of the time. Pretty awesome. Again, if we come back next year, and let's say next year the markets are down 5% to start the year, not so bullish for the year. But right now, this highlighted gray section is where we currently stand based on what has happened in January and February so far. There will be a recording, yes. How many times? This is just an interesting fun fact for you guys. And again, there's endless amounts of data. Jim, to your point, there's so much data. You could spend so much time looking that you're going to forget to trade. Here's just another fun times for you, or fun fact for you. People think maybe we peaked in February. We're going to head lower from here, have a bear market year. Only 5 of the last, I think this is 100 years, has the markets peaked in February and not gone higher. Typically, markets finish higher by the end of the year. So that's why we see October, November, December with some of the highest readings. Interestingly enough, the peak was in January 15 times, but this year the peak has already happened in February. So again, just historically speaking, markets tend to go higher over time. This is just a fun chart for you guys. Now remember, guys, history doesn't always repeat itself, but it often rhymes. So again, I don't look at any one chart and say this is absolutely what's going to happen. I look at a few different charts and say, okay, we're going to probably be in this range, give or take. Right now, I think we're in a bullish 90-day range between two. Probably, I think we could go to all-time highs based on what I've seen. Now, again, keeping to account the global economic factors right now, but I take into account dozens of market patterns, seasonality factors to get a gauge on where I believe the stock market will head next. And also, you guys know this, there's individual stock patterns. So we like to see the market bullish. We like to see, let's say, materials bullish, and then we'd like to see a material stock that's typically bullish. And that's what I do in the on-the-clock stocks with our monthly calendar. And I'm going to give you guys a few picks here, and then I'm going to ask you guys to upgrade to on-the-clock if you'd like. But we've got a few stocks coming up this month that typically enter bullish seasonality. So first off here, Amazon. Amazon on March 11th is a buy for an 18-day hold time. So that puts you at the 29th. So March 11th through the 29th, it's gone up every year for the last decade. Bullish time for Amazon. Just type this in the chat. March 11 through 29. Now, let me ask you guys a trick question. Does that mean it's going to happen this year for sure, without a doubt? Is it guaranteed to happen again this year? And the answer is no. But when you have an edge, you can be on the winning sides more often than not. That's just been my experience. Let me just go back here real quick. The average return is 3% on the stock. So a pretty good little bullish 2 week window here on Amazon, where historically you can get about 3% in 2 weeks. If you were to do that annually, that would be 70% a year. So that's why these dates can be really powerful. Bonus number two is VST, Vista Corp. This is March 27th buy period. Let me type this here in the chat. VST, March 27th. It's a 16-day hold, so that puts us at the 12th of April. And that averages 4.3% gain, 4.4% gain over that time period. Bullish windows for stocks. And the next one, and this is one of my favorite stocks right now, T-Mobile, down slightly on the day. It's forming a nice little pullback, but this stock's been a rocket. I switched my cell phone servers over to T-Mobile, so I'm biased. But at the end of the month, March 31st, let me type this in for you. March 31st, 19-day hold time. So April 19th, bullish window for T-Mobile, gains 3.2% on average over that window. So these are just fun bullish picks. Now, of course, you can see here some blurred. There's a couple other stocks in here for the month of March. We get about 6 to 8, 9 any given month that we really, really love. And these are all based off stocks that have gone up every year for the last 10 years without failing even once. So I want to invite you guys to go ahead and get the rest of the stocks and get the options, entries, exits all included. So let's go ahead and ask this question. What would you do if you knew that you could have bought Amazon on, let's say, May 25th every year, walked away with a profit? Didn't work just once, not just twice, but it worked for an entire decade. We're talking 10 years in a row producing winner after winner. So we just see it pull up on our calendar, March 25th, or May 25th. Long Amazon's worked 100% of the time. Mark our calendar for it, and let's see how it's done year after year after year. It's always gone up on that date range. Little tip for you guys. I'm going to give you about 5 stocks here too that you can trade throughout the year that are seasonally bullish stocks. So Amazon, May 25th, always worked out. When you trade the options, it's been really great. Imagine starting with $1,000, just trading Amazon alone over that decade could have compounded to $119,000. Now, of course, we're looking at an exceptional result here. The stock went up 10 years in a row, but this is what would have happened. Now, I'm not saying that will happen in the future, but I'm saying when you know that it's something this powerful, wouldn't you like to maybe take even 1/5 of that number? So only one trade a year and over 100 times return on the money. So think about it. If you had this kind of data, if you knew what stocks typically go up in each time frame of the year, what would you do with it? Well, this repeat phenomenon doesn't just occur on Amazon. It happens on a few dozen stocks throughout the year. Actually, we get about, again, 6 to 8 each month that we really, really like. And we just trade them on the same calendar dates every year, and it's produced winter after winter on the underlying stock over the last decade without fail. So we're only trading stocks that have gone up seasonally every year for the last decade. Like Walmart, another bonus for you, WMT on July 1st every year. And look at some of those top options. Not bad, right? Southern Co. tickers SO every year on October 13th, year over year. When you apply options, look at some of those top winners. What about Lululemon stock? I love Lulu. It's getting beat up right now with the tariffs, but I love this. May 26th, seasonal window. It's always gone up during those dates. And when applying the options, you get much, much bigger results. Now, I call these on-the-clock stocks. And these on-the-clock stocks have shown the power to pay out 78% on average with the winners each time they roll around. And that's based on our live alerts, not some sort of back test. Like Apple, January 6th every year. Target, March 27th. There's another bonus for you guys for March. TGT every year, March 27th. When you apply options, looks really nice. You see, Wall Street tends to trade on a repeating calendar. We talked about seasonality today. We talked about these patterns and how they repeat over and over and over again. They don't always happen, but maybe they happen 7 out of every 10 times. That's a 70% win rate. That's a really strong edge. So when we're looking at individual stocks, a lot of times they'll invest in the same stocks on the same dates year after year, tipping their hands at these on-the-clock stocks and allowing people like you and me to trade on our own schedule, on our own time, like Deckers every year, May 25th. SBAC every year, June 13th. Now, my system gives us unrestricted access to these profit dates. It tells me a whole list of all these stocks that are seasonally strong every year, year after year after year. And then we can just place a trade and follow along. Again, trick question, are every single one of them going to win? No, it's not how life works. But when you know a stock has gone up every year for the last 10 years, I think we can all agree there's a pretty good chance that it might happen again. Now, my system only gives us the stocks that have gone up 100% of the time on the decade. Here's a kind of a little Giphy of it running the code. And the stock only makes a cut if it's paid out every year. If it's failed even once, it's knocked off of our list. Then it automatically tells us which stocks are up on the calendar. Kind of ugly, but there's the ticker. We missed it. Ticker gives us the entry date, the exit date, all in advance, the average return, all in advance. That's one of the cool things here is we don't have to sit around and question what could be coming next. Like ticker, when to enter, how long to hold it. The thing's going too fast on me, but that's how it works. And this allows us to trade with 100% confidence on the decade. Now, I've been able to put together an entire calendar based on these on the clock stocks. And, I just showed you guys 3 of them on the calendar. There's about 8 on the calendar for this month. So there's a lot more opportunity. And all you have to do is place your trade when the profit date hits and then sit back, let the stock do the work for us. So today I'd like to invite you to take the next one with me in the program, the On the Clock Stocks calendar. So when my proprietary system shows a profit day opening up, you'll be the first to hear about it. Now, since we operate on a calendar, I'll let you know the top stocks at the beginning of the month. So you'll get the March calendar right away today, and then sometime near the end of this month, you'll get the April calendar. So then you can just mark it on your calendar or just print it off, have it on your desk, and then come back when the profit date hits to place a trade. Like AVGO here, Broadcom stock, every year on October 11th. Gone up every year October 11th, so we can just place a trade when that comes around. And here's how some of those options did. What about Costco stock? Every year on November 2nd. COST is the ticker. Great stock to buy and hold, in my opinion, but it's even hotter in November. Now, today you can get started with the brand new on the clock stock pick. But if you're one of the members who join here in the next few minutes, you're going to get a whole lot more. You're going to get at least 52 trades a year. That's one a week. All trades placed with that 100% confidence on the decade. Again, you're going to get the calendar in advance at the beginning of the month. And the newest trades available for you right now. Now, here's what's really important. You get the stock and options criteria. So it's not just going to be a ticker to buy and hold for 3%. No, I'm going to give you also the options where we're going to target between 70, 80, 100, sometimes 150% return. And no, this is not a year hold period. We're talking about typically a matter of 2 weeks. So we're always targeting somewhere around a triple digit return in 2 weeks. You're going to get at least 1 trade per week. But not just that, you're also going to be alerted with the steer clear stock signals. This is just the same thing, but to the downside. So just like there's stocks that typically go up every year, there's also stocks that typically go down during certain windows of the year. I'm going to let you know about them so you can avoid them. You also get the master class where I walk you through all the dates. I walk you through how I select options, what factors I use to look at the charts that said, you know what, this one, look, if there's 2 on the calendar for this week, I might compare the 2 and say, well, this sector is stronger seasonally, right? Materials are stronger this sector than discretionary. Let's pick the materials one. Or, this one has earnings at the end of it. I might avoid the earnings one and do this one. The master class walks you through all of that, as well as how to pick the options. And just remember, guys, this comes with my 14-day money-back guarantee. So you can try the service, dive into the videos, place as many trades as you like, take 2 full weeks. You're going to get the full March calendar. You can get all of the previous calendars. There's about 15 months of previous calendars. Print them all off, take them, steal them from me, and get your money back. No problem, guys. I want this to be something that's a win-win for you and me. I want you to love it so much that you're going to be begging for more picks each and every month because hopefully we're making money together. But if for whatever reason you join, and you decide you want out, there's your exit opportunity if you want it. Now, all in all, values near $7,000 for the service, but honestly, I think it's worth so much more. So if we look at our performance over the last 14 months, if you started with 5K, we're up to 70,000 in profit. Again, our average winner, almost 80%. Our average return, so this is winners and losers averaged out. We're close to 20% every 2 weeks. Again, if you could do 20% every year, you would be Warren Buffett. If you can do 20% every 2 weeks, that's just an incredible, incredible number. Now, keep in mind, don't go all in with one position. Don't put your whole portfolio in. But by just playing consistent and just sticking with the rules, this is not compounding. We're up to $70,000 on live trade alert results in the model portfolio over the last 14 months. Now, with that type of potential, we could obviously charge $5,000 for this and it would be more than worth it. But right now, people are still struggling. Either way, guys, I want this to be available to everyone. What good would I be doing if this calendar was only available to the folks with the deep pockets, right? I mean, I could do that. That would be great. But I want everyone to have it. Why not? It doesn't hurt me to give it to everyone. Now, this entire package would typically retail 5,000 a year, and even at that price, you could be getting a great deal. But today we're gonna do something special. Not 3,995, not $3,000. Right now we have it listed for 1995 online, 2,000 bucks for the year, which is a great deal. But I have a special announcement for you. Today I'm gonna give you guys an opportunity to start taking these trades for 95% less than the normal cost. That's right. I have a special deal for you guys to access these on the clock stock picks. You're going to get the calendar. You're going to get actually the March calendar and the April calendar. You're also going to get the 15 previous months of calendar where you can print them off and use them again this year. You're going to get 30 days of access for just $97, less than the price of an average gym membership. It's about half the price of my gym membership per month. And guys, you're going to get not just the picks on the calendar. I'm not going to leave you out to go guess on it on your own. I'm going to give you the entry dates. I'm going to give you the options criteria. I'm going to give you a basic call option. I'm also going to give you a wrap order or spread. So you have everything you need. And then I'm still not leaving you out to dry. I'm also going to give you the exit alert as well. So entry alerts, exit alerts, options criteria, basic call options, spreads for you more advanced traders. Again, I do as much as I can for you guys here. You're going to get the whole calendar in advance. And today you can jump in not for $2,000. You can jump in for just $97. So join now to get your first trade, guys. Here, let me post this link in the chat here. Oops. There's a link to join, guys. It's in the chat right now for you to take advantage of it. Now, I recently sent one to the members on Key. Had you taken it with me, 183% gain. Real trade here, real time. Like I said, these are very powerful trades. Now, they're not all going to be that big of results, but who's going to complain about that? 2,500 bucks into this one could have turned into $7,075. What is that? $4,500 in profit. Could buy you, I don't know, what is that? 80 months of this thing. So again, that's just one example. Now I already gave you guys some freebies. Remember, I gave you 3 picks that are on the calendar. But there's 1, 2, 3, 4, 5, 6 more. So 9 total on the calendar for this month. Go ahead, click the link in the chat, unlock those now. You'll also get the entry alerts, the options criteria. I'm gonna give you basic calls. So for you guys who like the basic calls, you're gonna have that. For those of you who like to trade the spreads, you're gonna have that. All done for you, entry and exit alerts. This is not gonna auto bill you every month, guys. It's a one-time fee of $97. My hope is that you're going to love it so much. You're going to call our team and upgrade. Now, for those of you who want to upgrade right away, I believe once you take your $97 trial membership, the next page will ask you if you'd like to upgrade to a full year. Go ahead and do that now. You're going to save some money if you do that today versus if you wait, it's probably going to be about $500 more expensive. And that's just the truth. So if you guys join today for that $97 deal, next page will ask you, do you want to do it for a full year? If you want to save yourself 500 bucks, go ahead and click that now. Again, it comes with my guarantee. So you're going to get 2 weeks to try it out. For whatever reason you hate it, whatever reason you don't like it, just get your money back. No sweat, guys. I want this to be a win-win. I want you to be a happy camper. If you're not a happy camper, I want you to be, completely taken care of. No problem. Now, just here's some feedback that I've been getting from my top students with the on-the-clock stocks. Daniel Lee said, last pick was on Wing, got almost 100% on that one. David A here, sold CCJ for 74%. I love you, man. Deb says 100% on Dell. Jason, 220% on ANET. Jeremy E said, thank you. Let me put this quote in here because it's weird without a second quote there. From California, 100% in, having fun learning. The value of this membership exceeds a college degree. Very nice. Howard said profit of $1,200 in 2 days. Chris T said, here's his results. And I love this from Chris. He's got 45%, 106%, 14%, 34%, and he's got a loser too. That's okay, that happens. But overall, Chris is up net about 120% here on the trades. Winners and losers happen, guys. But look, when you stick to the system, when you're averaging about 18% per trade in about a 2-week period, it stacks up over time. So you're going to get 1 to 2 new trades per week. Again, 30-day trial here right now for $97, less than the price of a gym membership, less than a cup of coffee from Starbucks, probably 3 days a week. Sometimes, you go to Starbucks twice and you're at $97. But hey, join today. Get the newest trades. I'm going to send you the entry alerts, the exit alerts, all to your email. You're going to get the call option. You're going to get the spread. So you guys can take whichever you prefer. And if you want to just trade the underlying stock, you can do that as well. Remember, you're going to get the March calendar, which has 9 total picks on it right now. Which remember, it's going to give you the entry date and exit date in advance and the average return. It's amazing. You're also going to get the April calendar if you take this trial. The most crazy thing to me that I didn't even think about is you're also going to get the February calendar, the January calendar, the December, the November, all the previous calendars too. So if you guys want to join, I would print those off just to save them because those are going to be the most actionable trade alerts for coming up later in the year. So guys, click that link in the chat to get started. And let me answer some questions here in the chat, and then I have some bonus materials for you guys as well. So any questions here in the chat? Dan, does this automatically convert to 1 year? Dan, it does not automatically do it, but once you take your $97 membership, it'll ask you on the next page if you would like to. I think I'm biased. I obviously trade this myself. I think these are awesome. I would upgrade to it. You're going to save yourself some money. Now, if you would rather wait, perfectly fine, not a big deal. However, you're going to save about $500 if you upgrade today. Zana, thank you. Is there another alert for this week? There may be. Do I hold it for a year, Daphne? Nope. I just hold it during these seasonal windows. Thank you, Dan. So now a little bonus for you guys, a little tip is I like to actually pair my seasonality with momentum. So I would, you can, sometimes you'll see a stock on the calendar and it's just kind of in a downtrend. And you might say, you know, it's gone up every year. I'm going to take it regardless. Sometimes I avoid those. I like to trade the stocks that are trending higher and seasonally bullish. Kind of like I said, like the Ben Franklin glasses. You get 2 filters on it, double confirmation. I like it. So I really like to pair my seasonality with my momentum tool, Newton. Here's T-Mobile, what it looks like with Newton. Beautiful stock. Look, buy on green, sell on red, nice gain. Let it flush itself out, buy on green. Still green right now, but say it was red, sell on red. Beautiful. So when we get something that lines up where it's, let's say T-Mobile was long on February 5th, and we have positive momentum, bam, double confirmation. Really, really bullish opportunities here. So now I'm going to turn things over to Sarah to walk you guys through Newton, how it works. Dan, she'll answer that one for you. But Sarah, if you don't mind taking this one over, I appreciate you all for being here today. Hopefully you got to learn some stuff, had some fun. The recording will be posted. But Sarah's going to walk you through how to get double confirmation with seasonality by pairing it with momentum. So thank you guys. Stick around. Sarah, thank you for taking over. Majority of the performances displayed here are historical examples based on Newton's signals found from the time period shown. While we've seen massive success in the past, I obviously can't guarantee any future specific trading results with Newton. Now, based on the back testing, Newton signals posted a positive outcome about 80% of the time. I'll take you through a couple of the different stocks that it's worked the best on, including guys, some stocks that have been in a downtrend for the last few years, and it still posted an 80% win rate. So buckle up. It's going to be a lot of fun. Now, the averages could be between 1 to 4% depending on the stock and the time frame you're using. Ultimately, guys, Newton is a tool for all traders, no matter who you are. If you're a swing trader, you're a day trader, if you're a scalper, whatever it is you trade, if you trade stock, ETFs, futures, Forex, Newton can do it all. But there's always a high degree of risk involved in trading. So, hi everyone, I'm Graham Lindman, and today you'll discover an effective new way to buy and sell stocks. It's a way of trading designed to help you pinpoint the exact day to buy in and then out of the markets. Now, I understand that sounds maybe a little bit far-fetched, and experts will tell you that it's probably impossible to time the markets. But as you'll see, it's not just possible, it's something that you can repeat over and over again. It's all thanks to this proprietary smart code running in the background. And what you're looking at is 117 lines of code that can track and leverage the real reason that stocks move. It's the backbone for what I believe is the best buy and sell indicator available today. Once it's applied to your charts, it can help you pinpoint the exact day to buy in and then out of the market. There you see buy on green, sell when it flips back red. Now, the way it works is quite straightforward. All you have to do is buy when the candles flip to green and then sell when they turn back to red. For example, let's look at the S&P 500, ticker SPY. At the end of last year, the SPY had just given back 2 months worth of returns, went down. Not good, right? Now, the majority of investors were certain that the downtrend would actually continue, and rightfully so. Many economists were predicting a recession in 2024. You guys remember those headlines? However, on November 13th, our indicator would have flashed its first green candle in more than 60 trading days. There you see it flip from red to yellow to green. Now, in this case, the indicator said it was the perfect day to enter the markets. And sure enough, it was spot on. It nailed it. Over the next 112 trading days, the SPY went on to make a new all-time high. Now, I could point to plenty of reasons why, this rally happened. It might explain it. The cooling inflation numbers, there you see it, right? CPI coming down, increase in some wages, even strong earnings projections. But I prefer to tell you this, none of that really matters, because before any of those news events came to pass, our indicator gave us the buy signal. Again, flip from red to yellow to green. It's that easy. And anyone who would have bought on green and then sold on red could have ridden the S&P 500 all the way back to new all-time highs. So if you're a stock trader, every $5,000 would have turned into $5,864. But if you're an options trader, that same $5,000 stake would have turned into $13,150. And it's all thanks to this proprietary buy and sell indicator. Now, I call it Newton, and it's the most advanced indicator I've ever released. Like I said, the code behind the indicator, it measures the underlying force behind a stock's movement. And by leveraging this force, it can show us the exact day to buy in and out of the market, regardless of conditions, regardless of sentiment. For example, let's step back to the bear market of 2022. Now, at the time, every major tech stock was underwater, including one of my favorite stocks, Apple. Now, over that 2-month span, the stock shed $30 a share. Sentiment surrounding Apple was so bad that even the famed investor, Michael Burry, took a short position on the stock. This is the big short guy. He knows a thing or two about taking a stock lower. However, July 7th, Newton issued a buy signal. There you see the green candle. Once again, you can see how the candles flip from red to yellow to green. Green means buy. And in this case, Newton said that it was the optimal day to enter the stock. Sure enough, Newton was right yet again. Over the next 39 days, Apple rallied higher. Now, looking back, we could point to several reasons that might explain this particular rally. That includes plans of a new iPhone launch, an earnings beat, but again, none of that matters. Because before either of those events occurred, Newton signaled a buy alert on Apple stock before any of that came out. Anyone who would have bought on green and then sold on red could have captured a 16% return on the underlying stock. That's the equivalent of about a 200% gain on the options. Every $5,000 could have quickly transformed into something like $15,000. Now, I've been trading the markets for more than 10 years now. I attended some of the top universities in the country, and I've even studied under 2 of the top minds in finance. But nothing has had a bigger impact on my success than Newton. Frankly, it's my crowning achievement. You see, Newton is a project that I completed in 2023, and the goal was to build a tool to help me validate our entries and exits across my different services. In December, it played a key role in helping us ride Apple for a 319% return. This was a real trade, real money. Put my own money on the line here. And then in July, it helped us do it again. This time we closed 436% return on Apple in 53 trading days. In fact, it's played a critical role in many of our best trades this year. 290% on Apple, 343%, 97% on the SPY, 85% on Apple, 102 over and over again. And that's why I'm here today. I'd like to share Newton with anyone who wants to become a better trader or investor. It's made a huge impact on my trading, and I think it can do the same for you. In fact, it's one of the few tools that removes the technical out of technical trading. And once it's applied to your charts, it can instantly transform them from a hard-to-follow mess to a treasure trove of buy and sell opportunities. Again, buy on green, you sell on red. How much easier can it get? For example, let's step back to February 20th. Now, that's the day Newton would have isolated a buy alert on Devon Energy, ticker DVN. Once again, you can see how the candles turned green, clear as day. Now, anyone who's unfamiliar with Newton may have questioned this particular buy signal. After all, almost every major energy producer was trading well below their all-time highs, and that included Devon, which was down almost 50% on the stock price. That's not a good-looking trend, huh? Now, traditional wisdom would have told you to avoid the stock, but Newton doesn't rely on traditional wisdom or theories or anything like that. It leverages the underlying
force behind the rise and fall of all stocks. And once again, Newton was right. There's that buy signal on February 20th. And by April, the stock had climbed 17%. Anyone who would have bought on green and then sold on red would have seen a 203% gain on the options. Now, if you're skeptical, you have every right to be. The timing of these signals seems very unlikely, but when you understand how the indicator works, it's really not uncommon at all. Now, looking back, it accurately signaled almost every major upswing that we've seen this year. That includes the run-up in financials. I know if you guys were paying attention to Telegram, we took advantage of this the other day. The rally in Bitcoin, again, we have been taking advantage of this lately. The run-up in big tech, the rise of healthcare, and it even nailed the 319% rally from SMCI without a single false signal. That's on the underlying alone, guys. That's a really, really big result. Now, as incredible as that is, Newton was actually designed for a much greater purpose. It was designed to help us pinpoint the precise moments to enter and then exit the market. It was designed to help us ride all of those highs, those big upswings, and avoid the lows, avoid that chop in between. And today I'm going to show you how it works and how to install it on your trading platform right away. Now, my hope is that you can leverage its power to make better investment decisions, maybe validate trades that you're already making, and most importantly, help you find opportunities that you may have otherwise just missed. Now, if this is your first live webinar with me, my name is Graham Lindman. I'm a senior options strategist here. Now, I'm a husband. I'm a father as of May this year. I'm a father, but I'm also a diehard trader, and I have been for a long, long time. More than a decade trading has been my life. I've never had any interest in speaking on Fox, CNBC, or Bloomberg, but I have hundreds of screenshots showing my best real money results, including a $5,000 winner here on UiPath. It's actually $7,120 on UiPath, $17,000 on Fortinet. We traded that twice now together, and even a $34,000 winner on Mara. Now, I'm not showing these results to brag to you, but rather to show you that I put my money where my mouth is. This year, many of my top strategies have posted triple-digit growth with accuracy rates greater than 70%. There you see the perfect Bitcoin trade, 81% win rate. We actually closed another one today, so that ticked up a little bit higher. And then NVIDIA Elite, you guys know about NVIDIA Elite. That one has a 76% win. That one also is now higher at 81%. Like I said, Newton is really good. And it's why more than 150,000 people from all around the country have followed my work. It's also why many of my top members consistently send me messages like this. Here's Mark said, made 450% on Graham's call on Path today. Thrilled to see how smart some of these youngsters are. Thank you, Mark. James says, great pick, up a little over $10,000. We'll be taking some profits soon. Richard wrote in, this is a no-brainer. All of your services are spot on in growing our accounts. Thank you, Graham, for all you do. Well, thank you, Richard, for the kind words. Diana said, all the trades were 100% winners. No losers. Jennifer says, hi, Graham. I'm up $5,000 on NVIDIA right now. Modi, you have been consistently spot on with all my progressive and General Electric trades. And boy, oh boy, have we traded those over and over again for some nice profits. Now, as great as that is, I owe much of my success to the insights that I've gathered from Newton. You see, it's not just another indicator. It's actually a quantum leap forward for both traders and investors. It's smart. It's strategic, and in my opinion, it's the most useful indicator for buying and selling stocks. And today, I'll share everything, including what's behind these colored candles, how they're able to accurately define buy and sell opportunities, the underlying force that makes it all possible, and how you can start leveraging Newton in your own Thinkorswim account this afternoon before the markets close. I'll even share some of its newest signals free of charge for you guys today. But before we get there, I'd like to remind you, Newton is not magic. You guys know this. It can't guarantee a winning outcome 100% of the time. Nothing can, guys. There's winners and losers in trading, and that's just par for the course. Now, it gives signals based on the real reason stocks move, and that's critical regardless of what kind of trader you are. You see, despite the market breaking all-time highs this year, very few stocks have actually been driving the performance of it. In fact, just 3 out of every 10 stocks in the S&P are actually beating the index. That means most stocks are lagging behind the SPY. Most stocks are falling behind. And that's the lowest number since 1947. I've shown you guys this. This is the hardest year to be a stock picker in over 50 years. And that's while the markets are making all-time highs. It's unlike anything we've seen before. Now, that's really bad for most people. But here's the thing you got to know. This small number of stocks has also had the highest concentration of market momentum. Here you see momentum. It's at all-time highs there among those few stocks carrying the markets. These are stocks like Nvidia, General Electric, Progressive, and Eli Lilly. Now, if you've been focused on momentum stocks like we have in my programs, you've probably done quite well. But if you haven't, it's probably been a tough year. You have to remember, momentum is what drives the market. When momentum levels are high, stocks traditionally move higher. But when they're low, stocks traditionally move lower. This is just common sense, guys. You see, momentum is the single most dominant factor behind the rise and fall of all stocks out there. And it's why the majority of hedge funds are actually using momentum strategies in 2024. It's so important. Yet most folks never consider momentum when opening a new position. And that's because you can't point to it on a chart. You can't just eyeball it. And most of the time, you can't even see it. But that's where Newton begins. It's able to quantify momentum levels into a tradable signal. In other words, it's able to show us which stocks are displaying the highest levels of momentum. Now, when our candles turn green, it means momentum levels are very high. They're above average. And when the candles are red, it means momentum levels are actually really low and dropping hard. For example, let's look at ticker ARM. In April, you can see how the candles were all red. Again, Newton automatically flips the color of the candle for you. So there's, you just pull it up, you see all red. Not good, right? That's a clear indication that momentum levels were extremely low on ARM. Now, as expected, shares shed 9% of its value during that time. Not good. However, on May 13th, the candles would have flipped right to green. In this case, it told us that momentum levels were high enough to support a tradable move. Now, look at this. There's nothing really out of the ordinary here. You can't look at the chart and say, wow, this is such an explosive move. It barely moved, but Newton picked up the increase in momentum and the candles were flipped to green. Sure enough, shares rose by a whopping 45% over the next 2 months, 45% on the underlying alone. For you options traders, that's the equivalent of about a 227% return if you just bought when it flipped green, sold when it flipped back red. However, I want to make one important note here. As great as that is, notice how the candles turned red on July 18th. Again, that's our sell signal. Take your profits. We're out of the position. Well, that's also a clear indication that momentum was no longer elevated. And as expected, shares came crashing right back down. But in this instance, it wouldn't have mattered one bit. Anyone who would have bought on green and then just sold on red would have been in and out well before the crash. You see, momentum, it can't stay elevated forever. You guys know this. It fluctuates based on price action, buying pressure, and a handful of other market factors. So if you've recently entered a trade and it turned against you, it's not because you're a bad trader. You likely bought at a time when momentum levels were just too low. But that's the real beauty behind Newton. It was designed to help ensure that we're only trading stocks with high levels of momentum. As long as the candles are green, we know that momentum is high enough to move the stock in our desired direction. For example, let's look at what happened on May 17th, the day after my birthday. That's the day that Newton issued a buy signal on Delta Airlines. And I want you to remember this ticker because I'm going to bring it up later. But here we go. May 17th, automatic buy signal here in Delta Airlines. There you see the candles flip to green. Once again, right when the candles turned green. And in this case, it told us that momentum levels were high enough to support a tradable move. And sure enough, Delta climbed 34% by the time that candles turned red again. That's on the underlying stock again. Straight up, flips red, we're out, we take our profits and we run. Now, $5,000 into the underlying stock would have turned into $6,700. Not bad. But $5,000 into the options would have grown to more than $18,000. Now, for some of you, that might be life-changing money. For others, it's barely a drop in the bucket. But regardless of where you stand, it's certainly enough to move the needle in your day-to-day life. I know it could help catch up on some bills, maybe pay off the credit card for the month, restock the emergency fund. There's nothing wrong with saving a little cash on the side. Maybe it's getting the car fixed, or maybe it's getting new rims on the car, paying down the mortgage, whatever it may be. Now, of course, I'm not saying Newton can guarantee a winner 100% of the time. We're all smart enough to know that nothing is 100% accurate. That's not how trading works. Losses are possible. That's why you should never bet the farm on any single position. That said, I've tested countless stocks against Newton, both good and bad. Many of them posted accuracy rates upward of 80%. For example, when we backtested Nvidia against Newton signals, it won 82% of the time dating back 5 years. That means out of the 57 unique buy and sell signals, 47 of them were winners. What's funny enough is that we actually tested on the 5-minute, the 15-minute, the daily, and the weekly, and we got the code optimized to automatically adjust no matter the time frame. and it still produced that 82% win rate. Now, the average return per trade was nearly 5% on the underlying, which is about 50 to 100% on the options. And thanks to Newton, I got to take part in some really awesome moves on the more recent trades here, including a 94% winner there, $2,000 in profit for me, 100% winner on NVIDIA, 142% winner on NVIDIA, and you guys have probably been taking part in some of that NVIDIA success lately if you've been following along. That said, many stocks performed even better than NVIDIA. For example, Kava. Anyone in here own Kava? We've rode that one up from $42 to $140. It has been the best stock all year. Well, that one's posted a 90% win rate by trading it with Newton. Eli Lilly, another stock that we bought back at 600, went up to 900. Well, that one, if you trade it with Newton, day trade, swing trade, whatever you might want to do with it, 91% win rate historically. Now, of course, I didn't just back test the market's best stocks. I actually tested plenty of duds too. I wanted to see that this works on all stocks, not just the stocks that are really good and going up. Let's look at UAL, for example, United Airlines. Now, if you were to Google the stock, you'd see that it's lost 41% of its value over the last 5 years. It's just gone down. No good, right? It peaked in 2019 and it has traded lower ever since. However, according to our historical tests, by simply buying on green and selling on red, it would have produced a 148% total return with an 81% accuracy rate. And you guys can see these green moves here are some of the best periods in the stock. And this is a screenshot straight from my Thinkorswim. That's not even using options, guys. To put that in perspective, simply holding the stock would have lost you 41% on your money. Markets would have gone to all-time highs and you would have been seeing your account dry up. That's not good. But following Newton would have resulted in a 148% return over 80 different signals on one of the worst stocks on the planet. You guys see the power of that. Now, I don't know of any other system, tool, or indicator that has the ability to do something like that. And that's why I wanted to share Newton with you today. I believe it could drastically improve the way that you buy and sell stocks. And I've experienced it firsthand. So whatever your goals might be, you'll have the additional support to help you achieve them. Maybe your goal is to grow your trading account. Maybe it's to help supplement your income. I think everybody would like a little extra cash flow right now. Maybe it's to save up and book a dream vacation. Whatever it is, I believe it will be much more attainable with Newton in your corner and on your charts, especially right now. You see, for the first time since 2019, the Fed cut interest rates. We've talked about this a lot. It just happened. Historically speaking, the market performs extremely well in the next 12 months following the first rate cut. I've given you guys so many classes showing you that these next 12 months should be so bullish, it's not even believable. Just look at the charts here, guys. The S&P 500 has posted positive returns 12 out of the last 14 times that the Fed has started cutting rates. You see, rate cuts typically push money towards the stock market. Following the September rate cut, we saw $38.5 billion flood back into stocks. That's billion with a B. That's a lot of money. According to Barron's, that was the highest influx of cash in months. It's piling back in. And that's why we saw a rally in many momentum-oriented stocks, including Vistra Corp, AMD, and even ANET, which I love ANET right now. That's a ticker you might want to write down. According to my estimates, there's roughly $6.5 trillion that could flood back into stocks from the money market accounts. And it might not be all of it, but imagine what $1 trillion would do if 38 billion just pushed us to all-time highs. But here's the thing, guys. That money, it's not going to flow into every stock out there. It's going to go where it has the best chance to grow. And right now, that's into momentum-oriented stocks. Like I told you guys, there's 25% of the market is being pulled up, or the market is being pulled up by 25% of the stocks. There's a very small basket of high momentum stocks doing all the heavy lifting. And with Newton in our corner, we'll know exactly which stocks those are. Now, in just a minute, I'll share a few new trade entries with you completely free. But before we get there, let me show you what's behind these colored candles. Let me show you how it works. Strangely enough, it all starts with those bars you see down there. Now, you may have noticed how they're perfectly in sync with the candles above. That's because they're actively displaying momentum levels in real time and in a way we have never seen before. Now, as you can imagine, that's not an easy task, but that's where our smart code comes into play. It's able to quantify momentum levels into a tradable signal. Now, in order to do that, it has to account for several technical factors. This includes price acceleration. Notice as this thing slingshots up, we're seeing some slingshot down here. Also, the rate of change and the variance between multiple EMAs, which I hid all this because I don't want you guys to have to see and deal with all this nonsense. From there, it can determine if momentum levels are trading above average or below the stock's normal average. Now, it might sound pretty complex, but it's actually really easy to understand. The red bars indicate that momentum levels are trading below the average range. So, red means that a stock is actually moving below the average momentum level. And that's what causes the candles to flip to red. The yellow bars indicate that momentum is trading right about within its average range. So, it's moving about average, nothing out of the ordinary. That's when the candles will turn yellow. But the green bars indicate that momentum is trading above its average range. This is when the candles will turn green, when it's moving faster than normal. And that's the secret behind Newton's accuracy. It can accurately determine if momentum levels are trading above or below a stock's average range. For example, let's look at Adobe. This is a prime example here. Notice all the bars are red, right? That's a clear indication that momentum levels were trading below the stock's average. It's not moving very fast. It's actually moving slower than average. And as expected, shares traded lower. They just drifted lower and lower. Under no circumstances would we want to enter the stock. However, May 19th, the bar turned yellow. In this case, momentum levels had moved back to their average range. This is kind of like us being on deck. Okay, we know Adobe was now, it was red, momentum was negative momentum. Now it's average. Let's keep our eye on it. And when this happens, we know that momentum is rising, but it's not high enough to support a tradable move just yet. That said, the yellow bars indicate that momentum is shifting from one side of the spectrum to the other. And that's exactly what happened here. The bars flipped from yellow to green, indicating that momentum levels were now trading above its average range. And as expected, shares climbed 40% in just 56 trading days. Now, $5,000 into the stock here would have turned into $7,000. But $5,000 into the options would have turned into more than $23,000. Now, obviously, that's an incredible return. Not all of Newton's signals result in a grand slam like that one. Some signals, they may be smaller. Some may actually be a loser. But here's what I want you to understand. It's very difficult for a stock to move lower when momentum is trading above its average range. Think about it. If a car is driving faster than normal, what are the chances it's going to run a slower lap? Not very high. And that's what makes Newton such a reliable indicator. As long as we see green, we know momentum is high enough to support a tradable move. For example, let's look at Costco. Notice how Newton was all red there. That was an indication that momentum levels were trading below the stock's average range. Now, that's obviously not an ideal time to open a trade. However, notice how Newton turned yellow. This told us that momentum levels had moved back to their average range. Remember, we're shifting from red to green. Once again, this is a clear signal that momentum levels were rising, but not yet enough to propel the stock higher. So we're on deck. We're waiting. That said, the yellow bars almost always precede a green bar. Sure enough, November 10th, Newton turned green. There you see. And as expected, shares rose 30% in just 82 trading days. 30% on the underlying stock. Now, that just obviously blows out the S&P for an entire year, and it did it in just a few months. Now, that's pretty incredible considering you wouldn't have had to do anything all that difficult. No deciphering chart patterns, no looking for pullbacks, no measuring momentum on your own. You just simply wait for Newton to turn green. Then you can open a basic trade and close it out when it turns red again. Doesn't matter if you want to trade stocks, bonds, ETFs, Bitcoin, whatever it may be. Newton was designed to help us pinpoint the exact day to enter and exit the markets. For example, let's look at my favorite stock, Kava. I love this restaurant. I love their stock even more. April 26th, Newton turned green. Big buy signal there. On July 10th, it turned red. Clear-cut sell signal. That's a 345% gain on the options. What about American Express, ticker AXP? November 6th, Newton turned green. That's a buy signal. Actually, let's look at this real quick. If you're looking at this chart, do you see momentum? Do you see anything crazy out of the ordinary? You can't see it, but we can quantify it now, and Newton picked it up when no one else was paying attention. January 16th, it would have turned red again. So we bought, now we sold 300% on the options in 48 days. Then on January 26th, turned green again. And on April 5th, it turned back red. That's our sell signal. And that's another 263% ROI in 49 days there. Now, $2,500 into each of those trades would have turned into $19,125. Now, that's not enough to change your life overnight, but that's not what Newton's about. Newton is about isolating tickers backed with high amounts of momentum. It's about finding stronger setups more consistently, and it's about watching meaningful opportunities add up week after week, which brings me to the signals that I'd like to share with you today. Now, these are stocks that could perform well over the next 30 days or more. Obviously, nothing in the markets is guaranteed, so please proceed with caution. Be smart here, guys. But if you'd like to write these down, grab a piece of paper, and I'll go ahead and share the charts here. Ticker number one. Remember, I said this earlier. I said Delta Airlines. Write this one down. Last time, you guys can see here, last time momentum flipped from red to yellow to green, Delta went crazy. Shot up about 20-30% there in a matter of weeks. Well, it flipped again just about a month or two ago. And look how it's gone since. This one still has room to run. And I really like where Delta Airlines is at right now. What about BK? This Bank of New York right here. Again, you see it flip from red to yellow to green. Now, I wish I could go back to August and give this to you right here. Problem is, this has been just such a good high momentum stock. It keeps going higher and it's showing no signs of slowing down. Little pullback here, but momentum is still elevated above average. BK is a great buy right now. And what about CRM Salesforce? This one is trading at a discount from where it was beforehand, but there you see it. The momentum was red. Not a time to buy. Yellow, we're on deck. It's average momentum. Bang. Flips up to green. That's above average momentum. And CRM has been trading at above average momentum pretty much ever since then, with a small pullback here to average momentum, but it's just flipped back green today. So this is a fresh buy signal for you. CRM is the ticker there. And today, for the first time, I want to actually share Newton with you. I want to give you the keys to the kingdom. And the reason why is simple. In the months ahead, the Fed will cut rates again. As a matter of fact, I expect them to do it is that next week here in November, guys? In fact, 2 rate cuts have already been scheduled, and I think each cut will unleash more of that $6.5 trillion currently sitting on the sidelines. And I think each one's going to do it at a more rapid pace than the previous one. Remember, we just saw 38 billion flood in, and it pushed the markets to all-time highs very, very quickly, which we were all over, by the way. We called the bottom. August 6th called it. Momentum flipped back, and we traded all the way up. That was $38 billion. Could you guys imagine what $100 billion might do? What about $1 trillion if it flips back to the stock market? Guys, we have a very, very short time window of bullish momentum ahead of us. And in my opinion, much of that will flood towards momentum-oriented stocks. And with Newton in your corner, we'll have the best chance to ride them higher together. So if you'd like to add Newton to your charts this afternoon, then I'd love to help you do that. You see, I put together a special package called the Newton Instant Access Guide. Inside, I'll share the smart code behind Newton and show you how to paste it on your Thinkorswim charts. Real nice and easy. It should only take you less than 60 seconds. And I'll also show you how to target investment opportunities with it, swing trade opportunities, and even day trade opportunities. You guys know I'm not a huge day trader. It's not really my thing, but I built Newton so it would work perfectly for you in a day trade environment. At the beginning of this class, I showed you that 5-minute chart of the NASDAQ. The QQQ has been red all day. A lot of people bought the gap up, hoping it'd go higher. No, Newton said stay away. It's red. Now, at the same time, it said IWM small caps green right at the open. It has been green ever since. Guys, you can use this to day trade like unlike anything I've ever seen before. You see, Newton is incredibly versatile. For swing traders and investors, it will give you signals that you can hold for a few days or a few months. Again, you just buy on green, sell on red. But if you prefer day trading, it can feed you quick in and out trade ideas too. It's perfect if you don't like holding trades for long periods of time. For example, let's look back what happened on September 11th. If you don't remember, Nvidia sold off after the opening bell. There you can see the downtrend. Most folks assumed that a down day was coming ahead. However, at 10:05 a.m., Newton posted a big green candle. There you can see it flip from red to yellow to green here on the charts. And like always, it was a clear indication to open a position. Sure enough, shares rallied for the next hour and 40 minutes. Look at that. And then flip back red. Anyone who would have bought on green and sold on red could have seen a 31% gain on the option during that day. Now, that's no different than starting the morning with $2,000 and collecting $620 in profit by the time you eat lunch. Again, we talked about cash flow. Some people want cash flow. Imagine if you opened up your brokerage at 10 a.m. and by the time you were eating lunch, it's $620. It doesn't matter if you're a day trader, if you're a swing trader or an investor, Newton can help point you towards the stocks showing the highest levels of momentum. Now, before I share the sign up link with you, I want to help you hit the ground running as quickly as possible. You see, once you have access to Newton, you'll be able to type in any ticker and see whether momentum levels are high enough to support an upward move. And with one glance, you'll know whether you should be targeting the stock or if you should be avoiding it. But I've done something extra special to help cut your learning curve in half. You see, I've reformatted the smart code behind Newton and turned it into a stock scanner. In short, it can scan through thousands of stocks and display the few that are showing the buy signals today. That means you don't have to sift through dozens of stocks just to find the one you want to trade. The scanner is programmed to do the heavy lifting for you. For example, September 12th, VST popped up on the top of the scanner. There you see it right there. Had you typed in the ticker, you would have seen a fresh green candle, a very tradable candle. And sure enough, the stock climbed more than 40% in just 12 trading days. Not bad, right? Every $2,500 into the stock would have paid $1,100 in profit. That's awesome. That's on the stock, guys. But every 2,500 bucks in the option would have turned into more than $10,000. And that's pretty incredible considering the scanner could have pointed you towards this opportunity. You wouldn't have had to dig through dozens of stocks to find a worthwhile setup. You wouldn't have had to eyeball different chart patterns, and you wouldn't have been stuck in front of your computer all morning long. It's just point, click, and then trade. Like I said, Newton takes the technical out of technical trading. It can transform your charts from a hard to follow mess to a steady stream of easy to find opportunities. Now, it's worth mentioning that Newton will only pair with Thinkorswim. It's the only platform that can support all of its capabilities. And if you don't have Thinkorswim, don't worry. You can download it for free. In fact, that's what most of my team has done. They use Newton on Thinkorswim, but place their trades through a different brokerage account. And while I think that you'll find it very user-friendly, I never just give you the indicator and wish you luck. I want to take you by the hand and show you how to use it for yourself. I want you to have the same experience that I've had with this tool. That's why all Newton users will be invited to our next live trading session. This is where we'll dive into day trade and swing trade opportunities. I'll also show you how to use Newton to trade to the downside as well. So if anyone wants to use puts, leverage some downside profits, I'll show you that too. As you might expect, it works just as well if you like to trade short. And in my opinion, there is no better way to level up your trading game. If you've attended any of my training classes before, you know we almost always find some worthwhile opportunities. And here's what a few of our top attendees have said. Alicia here said 300% on Apple calls during the May free class. Awesome. Super grateful. Howard made 160% on Apple yesterday. David, I love you, man. Free trades are awesome. He's on target to make over $500,000 between two of my programs this year. Obviously, that's an outstanding testimony there. $500,000 from David. Greg says, we'll close out tomorrow on SMCI for 100% gain, $2,650 in profits. Woo-hoo. What about Howard here? It was a little apprehensive because of the Fed meeting, but I'm glad that I followed you. I only got 2 contracts for 410, sold them for 680. That's a profit of $540 in just a few minutes. I love it. So if you're committed to taking your trading skills to the next level, then I'm committing to helping you get there. And to prove that to you, I'm doing something very special today. You see, Newton retails for $14.97. That's $1,497. If you've been to our webinars before, you know that most of our offerings start at that price and typically work upwards from there. But I'm going to show you that I'm committed to helping reach your goals. So I'm slashing 50% off the normal retail price right away, cutting the price in half, no questions asked, right out of the gate. So instead of seeing the normal 1,497 price point, you'll be able to secure access for just $749, less than $1,000. But that's not all, guys. That means you're going to get lifetime access to no subscription fees, no annual renewals, no recurring charges. If you join today during this webinar, you'll also receive lifetime access like I just mentioned. Again, guys, that means no subscription fees, no annual renewals, no recurring charges. That also means you'll be able to attend all future trading sessions. Plus, you'll automatically receive any updates or additions I make to Newton at no extra cost. So if you'd like to get your hands on Newton right now before the markets close, get your credit card ready now, because today you can be one of the few people to lock in lifetime access, not for $1,500, just $749 one-time payment. Guys, simply go to prosperitypub.com/new, or you can also click that link in the chat to get started, guys, or give us a call. If you prefer to talk to someone in person, call us 321-888-3962, then press 1. Our team is standing by and ready to help you. Now, once you fill out the order form, you'll be able to get Newton up and running within just a few minutes. Like I said, it should only take about 60 seconds to install it on your Thinkorswim platform. That said, if you need some extra help, well, I've got you covered there. This week, we're also hosting several live white glove install sessions. During these sessions, one of our experts will happily walk you through the instant process, click by click. Now, dates and times to join will be posted inside your members area. So if you'd like to secure Newton at a 50% discount right now, again, this is the first time we've done this. This is a ribbon cutting event here. We're marking it half off for the newbies today. Guys, go to prosperitypub.com/new, or just click that link in the chat. And I believe it'll help make a huge impact on your trading, regardless of what the market does next. You see, Newton works in both directions. Not only can it signal stocks on the cusp of moving higher, it can also show us when they're on the verge of moving lower too. Now, looking back, it accurately signaled every major crash we've seen in the last 5 years, including the COVID crash of 2020. When didn't you like that warning? When it flipped red there before the markets melted down. The bear market of 2022, again, there it flipped red before the meltdown. The bear scare of 2023, big warning sign, flipped to red, we know we're out, and you save some money there on the downside. It even warned us of both major pullbacks that we saw this year in 2024. And in my opinion, there's no better tool for navigating the markets than Newton. It was designed to help us ride all of the highs, all of the good times, and avoid all of the lows too. So if you haven't clicked the link in the chat, you can do that now. And after you fill out the order form, do not close your web page. It's going to take you to another page that I want to tell you about. I have something very special to share with you. It's a way to trade Newton alongside of me using my world famous option strategy. Even in all the chaos, the two have helped me post several needle moving winners while limiting our downside risk. That includes a 93% winner in 3 days, 100% winner in 4 days, 132% winner in 7 days, and many, many more. Just $1,000 into any one of those trades could have easily covered the cost of Newton. Just one trade. And today you'll have the chance to target similar opportunities on a weekly basis. So again, if you're interested at all, I'll share more details after you fill out the order form. So click that link in the chat, get Newton. That's a no-brainer. That's definitely a done deal right now. Go sign up, get Newton on your charts. On that next page, if you'd like to get some trade alerts alongside of Newton, I'll offer that there for you as well. Simply go to prosperitypub.com/new, or just click that link in the chat to get started. Or if you want to talk to someone, 321-888-3962, and then press 1 to be directed to the team right away. In the meantime, let me answer some common questions for you guys. Question number 1, what time frames work best for Newton? Well, for swing trading, I prefer the 1 day or the 2 day or the 4-hour time frames. If you guys were looking at Telegram, I shared with you guys DJT. That has been one of the most explosive picks I've seen in a while. Newton was all over it. That was on a 4-hour time frame chart. Again, the smart code automatically adjusts for you regardless of the time frame. For day trading, I prefer the 1 hour, the 5 minute, and the 1 minute time frame. All are really good. 5 minutes probably my favorite, but they're all very, very good. Question number 2, are there any additional fees with Newton, any maintenance fees or anything like that? Nope, no fees, no renewals, no BS. Once you purchase, it's yours to keep forever. Question number 3, is there any sort of guarantee packed into Newton? Of course there is, guys. If you followed me for any amount of time, you know that I offer everything with a money-back guarantee. So here's the deal. I want you to use Newton for the next 7 days. If it does not help you make better decisions or find better opportunities, I'll buy it back from you. No questions asked. I mean, your money back. It's part of my industry-leading buy-back guarantee. So you can simply call our team within the next 7 days, and we'll get you squared away. Although I don't expect that to happen because there is no tool, no system, no indicator that's had a bigger impact on my trading. And I'm confident you'll share the same opinion once you start using it today. And if things go as I expect, I would not be surprised if you cover the membership costs in a short order. Of course, I can't promise that will happen for you, but I have seen it happen many times with different services. And if it does happen for you, I want to hear about it right away. Greg did it. He said, my first trade exceeded the program cost 3 times over. Thanks again, Graham. Howard said, Graham, those 2 calls were over $5,000 in profit, which would more than pay for your program for a lifetime, which I highly recommend. Ken said, I've made profits much greater than the cost of my lifetime membership within a couple of weeks. Howard again here. Took 3 of my recommendations, closed out all 3 with a profit. Well worth the cost, and you'll recoup the cost very quickly. Thank you, Howard. So if you haven't filled out the order form yet, guys, go to prosperitypub.com/new or give us a call, 321-888-3962, and then press 1. They'll get you squared away. Now, when you do that, you'll be one step closer to joining some of my most successful students across my services. Q here says, no one will want the refund. I'm VIP and love taking the profits week after week. The alerts are very clear and easy to follow. Good for all stages of traders. Lefty here, averaging $750 per week for the last 3 weeks. That's some good cash flow there, Lefty. Michael said did his first trade on Apple, $1,800 in profit. Richie said with just one of the trade recs, I'm up 400% in 7 days. How about Richard here? Here with a 97% gain on day 1. That's awesome. Ben took 2 trades. Both were 100% in a week. Now, today is your chance to become the next success story. So take the first step, guys. Go to prosperitypub.com/new or just click that link in the chat to get started. Again, guys, you're going to get the instant access guide, the Newton Smart Code. Guys, it's going to take you 60 seconds to get on your chart. It's so easy to install. You just click a link, paste it in, and you're done. Again, guys, It also includes the Newton scanner. It's going to give you all of the buy signals every single day. I also have a bonus I didn't get to cover today because, like I mentioned, it also works to the downside too. So I also included an additional short scanner. If you guys want to trade stocks to the downside, that's included for free. And alongside of that note, free updates and upgrades will be coming your way as a member whenever we have anything new to publish or push through. Again, today, guys, we're cutting the price half off. This is the ribbon cutting event, groundbreaking event here for Newton. We want to get as many people started using this tool right away as fast as possible. And we want you to not have to pay an arm and a leg to get rolling with it. So guys, that will be included for free, that 50% webinar discount. Again, no renewal fees ever. This is a lifetime membership, guys. Once you sign up today, you are good to go, ready to rock for lifetime. And again, 7-day buyback guarantee. If for whatever reason you're not totally thrilled with Newton, then your first 7 days, guys, I'll buy it back from you if you don't love it. That easy. Installation support, we've got the white glove installs for you, ready to rock and roll as well. Now, I've got about 200 chats here. I've got to go pull up and open them. Raleigh, Dave, if you don't mind jumping back in and giving me.
Yeah, unbelievable, Graham. What a terrific presentation. And you covered so much material. It's amazing. And there were several questions that came up. So one of the questions that came up most often, they're going like, okay, I get that I see the alert. The question that I've got is how do I convert that into an options trade? Do you have some trainings on that, how to turn that into options? Because people get that's the way to supercharge the opportunity.
Yep, absolutely. I've got all sorts of options training in the members portal, and I'll always be adding more because like I said, you guys, once you get access to Newton, you'll be invited to all of our live trade rooms. You'll have lifetime access to that. And I typically teach you different options, tricks and tips along the way. So there's going to be ongoing education here as well.
Yep. A lot of other people have been asking. I know that you said it over and over again. Folks, it only works on Thinkorswim. So people are going like, well, if I don't have Thinkorswim, do I have any other options? And I think the clear-cut answer is no. And I mean, Graham, you can explain this a little bit better, but we're not affiliated with Thinkorswim. They're not paying us to promote them. But tell us why Thinkorswim is the platform that you chose to develop this on.
It's personally my brokerage of preference. It's so customizable. It's like a sandbox for any trader. So we've been able just to, build so much in there, and it's just so adaptable to what we need and use. You can set up alerts, you can set up email alerts, text alerts. It's just so awesome all around. I really wouldn't prefer to use any other platform.
Yeah. One of the things that people are also asking about is, we seem to have a lot of people on from Canada and, other countries today, and they're asking about, not being able to open a Schwab account. So just want to make sure everybody knows you don't actually have to open a Schwab account. You can get the Thinkorswim tool without opening and funding an account. So it shouldn't matter really which country you're from. You should be able to use that tool, and this should work for you.
And some other questions came up, Graham. They're saying that, many of the charts that you showed there showed you analyzing the markets and looking at opportunities on a daily chart. But I think you mentioned you can also go to different time frames. And along those lines, people were saying, hey, can I use this to trade futures, for example, like NQ or ES? Or
you can use it on any stock out there, any stock, you name it. You put it on there, it'll work. It even works for penny stocks. You can use any ETF, SPY, XLK, XLE, whatever ETF you might like to. You can use futures. EMA the S&P. You can use the Dow futures. Anything. You can use Forex. You can use crypto. Any ticker that you can possibly tie into Thinkorswim, you can use. You can even use it to analyze options. If you wanted to track momentum on certain options chains, you could do that as well too. It is there's no limits to Newton.
That's unbelievable. So you could basically apply it against any symbol that is supported on Thinkorswim is going to be supported by Newton. So when you load that onto the platform, you've got that, folks.
That's exactly right. Nathan, yes.
So another question was this. So people are looking at this and they're going like, so Graham, do you use Newton in some of your other programs? For example, if somebody said, hey, do you use Newton to help you identify moonshot trades?
Newton has been a driving factor behind a lot of my trades. I'll just say it there. If you guys have been enjoying the NVIDIA Elite success, we just had another big winner last week. I think we're hitting 82% win rate. The profit results so far are out of this world. That's actually where Newton started. I was trying to find the best way to trade NVIDIA, and we ended up just growing it and growing it and growing it until it ultimately came across what I think is just the most versatile indicator of all time. It works on every different time frame. It works on any different stock, and it's just amazing. Like I said, I tested it not just on NVIDIA, like Delta Airlines. or not Delta, United Airlines, which is down 40% over the last 3-4 years, Newton would have turned that 40% loss into 148% return on the stock.
That's
so imagine,
incredible.
I mean, if you even broke even on United Airlines, you've
been happy.
hitting it out of the park. Imagine doing 148% on a stock that's just gone straight down. So
and
that
as you
just shows
said,
you the power of that.
and you said that was just on the underlying. That wasn't assuming, doing any options on that
That's
whatsoever.
Yep.
So some people are also wondering about, just concerned a little bit about the market is trading at all-time highs. If the market turns around and starts to retrace, or even we see a little mini depression or whatnot, is Newton still going to help us out?
I guess to answer your question with the question, if the markets were to turn around, wouldn't you want to know that ahead of time? Wouldn't you want to be able to see it on your chart that the market's just flipped from green to yellow to red? I think Newton is a perfect tool for anyone who's worried about the markets at all-time highs, because like I've shown you, it's called every major crash over the last 5 years. Let me go back and show you guys how good it's been at getting us out early before most of the damage kicks in. Let me jump back here. I'll find these slides. Anyone
I
worried
think
about
while
a
you're
crash?
doing that, you made the comment that if you see these opportunities, that might be a great time to buy a put, for example, or to
Absolutely.
short that particular stock.
Absolutely. So here, COVID crash. Who would have liked to avoid the 30% drop in about a month during COVID? Avoid all of that pain and then buy back down here. Look, you sold here, you buy back here. Who's complaining about that? What about the bear market of 2022? Wouldn't you've liked to known that back in January? And this isn't even like late January. This is the beginning of January. It told you the bear market was coming. Bear scare of 2023. Again, if you guys are worried about the markets being at all-time highs, if you're worried about a pullback, I think that you're going to want Newton right now more than ever before, because it tells us when momentum simply just goes below average on the S&P 500. Like,
All right, everyone. Well, thank you so much for joining us for this past. If you were here since the opening playbook, you've been here since 10. But thank you for spending the past hour with me, at least, to go over Newton. Do you guys have any last minute questions that I can answer for you in the chat? If you did miss any part of the presentation, just put your name and email in the chat so we can go ahead and send it over to you. We are live on YouTube as well, so I can go ahead and post that link in there. I think I did earlier. So we were also live on YouTube in case you missed it and you want the replay. Or you can just drop your emails and we can send it right over. So I'm putting the YouTube link in there. And yes, user, you can trade put options as well. So he does go over that in his training. Typically, he does the call options, the bullish. I mean, you may hear Graham say that, but he's not opposed to trading the downside either. So he does go over that in his master classes. Let me see here. Absolutely, Susan, will do. Right, just responding to some of you. Are the master classes free? Yes. So once you get one of the memberships, the master classes are included for free. Now, right now, if you do follow Graham on that YouTube link that I sent you, you'll also see like him going live every day too. So those are free. And then absolutely, Jeff, I can do that. And you're welcome, Priscilla. It was a pleasure. All right, I was able to get an answer to your question. Well, fantastic, everyone. I'm going to post that link in there one more time. It is prosperitypub.com/Newton if you don't already have it, or you can give our team a call. They're standing by 904-706-3537. All right, it's one of the tools that's transformed trading. I actually use it myself. I was telling Priscilla in the chat there that I was using it on NVIDIA yesterday to trade that mini downside window that we had. So it's really fun. And I think it was Dave earlier, he was agreeing, where I use Newton as like a confirmation just to make sure. And it saved me when I think and I'm like, oh, okay, I can make a trade. I go to Newton, I'm like, wait, maybe I shouldn't make that trade. And it actually was right. It saved me. So I'm right with you there, Dave, if he's still online. But all right, guys, thank you once again. I'm going to stick around just to collect those emails that you're posting in the chat for me. I did post the YouTube link in there if you want to go ahead and watch this. We were live on YouTube. All right, and we look forward to seeing you guys in the next one. Let's make your next trade your best trade yet, or maybe Newton will save you from your next trade. All right, guys, have a great rest of your day, and I will see you next time. Have a great one.